Welcome to the FOMC Live, ladies and gentlemen. We're going to have so much fun this evening. Pal's going to be speaking in the next 45 minutes or so, but in the next 10 minutes, we are going to be witnessing the federal funds rate and the FOMC statement, so there is a lot that's going to be happening in the charts within the next 45 minutes or so. So if you are new to the channel, you're going to want to stick around to this bad boy because we're going to see some wild price action movements going into the FOMC meeting. Now, more importantly, throughout the stream, as we were waiting for Pal to speak, we're going to be diving into this story about MicroStrategy considering getting rid of some Bitcoin to meet some long-term debt obligations. We're going to dive into MicroStrategy stock to help anyone that might be looking at MicroStrategy thinking, is it now a good time to pick it up, or is the FOMC just going to put everything on its backside and send everything to the downside? There may be some cheap opportunities coming up, ladies and gentlemen. So in the next few minutes, FOMC statement, then of course the federal funds rate is going to be released. We're going to go straight into the charts. Hold your horses, ladies and gentlemen. Don't be going blindly into trades because it's going to be a quick move. Let's get with the flavor, guys. All right, then. So here we go. What we usually like to do is we have to pick off the key assets that are going to suggest the sentiment. We can all look at Bitcoin with Bitcoin on the top left right here. We've got gold on the right. We've also got the dollar dominance down below right here, so I'm not really too fussed about that just yet. And then we have the S&P on the right down at the bottom right here, okay? Now, what are we waiting for? Well, let me expand the chart out for you guys. There is this area right here in Bitcoin that I believe momentarily heading towards the FOMC funds rate and the actual statement itself, which will be coming out very shortly. So we're waiting for this bad boy right here. Where is it? FOMC statement. Once that bad boy comes out, we're going to see some volatility. But the volatility isn't over. Don't make the mistake of thinking that if Bitcoin does come down, that's it. Okay? The FOMC press conference is going to set everything up. And what we're going to be doing today, guys, is we're going to be watching the FOMC press conference live. So I'm going to be picking off what Powell is saying. Are we going to try and work out if he's going to be dovish? Is he going to be hawkish? We're going to scrutinize everything that this guy is going to be saying. And it's going to be playing in the bottom right. And we're going to be watching price action whilst it's unfolding. The press conference is when the true manipulation comes into play, guys. All right? Now, once the actual FOMC statement and, of course, the federal funds rate is released, there's going to be a window for us to actually start navigating the charts and witnessing the initial reaction to the statement and, of course, the federal funds rate. That way, I'm going to be looking at certain altcoins. I'm going to be looking at some Forex, some stocks maybe. I'll dive into that MicroStrategy story very shortly once we've got that data coming out, which will be out in the next 5 minutes. So if you are new to the channel, we need to get the likes up because we're going to be bringing you some flavor. We're going to be bringing you some Bookmap. This bad boy's been serving us a little bit well today, ladies and gentlemen. We saw Bitcoin today coming back up, giving us that little bit of a trick move down to only come back up to start breaking even higher. So, ladies and gentlemen, if I speak too fast, please slow it down on the playback. But more importantly, just listen quick, man. So let's get with the flavor. What are we working with right now? Cool. Now, Bitcoin, big green vector candles come back into the daily open. Projection complete from today's live stream, ladies and gentlemen. They come back up and ripped it. Took out the vector zones, recovery of the red vector right here. Now, if you are new to the channel, vector candles, which you see green, blue, red, they give us the impression that there is a lot of activity, selling activity, buying activity, but it's reverse. We know that market makers involved in encouraging people to buy and sell. So when you see big red vector candles coming into play like this one, it tells us that the market is trapping traders short, okay? Now, whilst we're waiting for this news to come out in the next 4 minutes, we're going to go over to the high block to suggest where the liquidity is. Now, you can see face value. If I run this chart again, you'll be able to see that we do have quite a few short liquidations at 224, but there's also a total of 199 long liquidations. So we're in an even distribution on how many people have leveraged positions on exchanges across the board. Now, with that being said, if we zoom in ever so closely, you can see that we have just had a few people go long at the highest point. $35 million worth of longs were opened at 28,769. Okay? That's what I mean. Retail, it's going long because they need a reason to go long because they are programmed to believe that when it's going up, you buy it. That's clearly what happens. They just bring it back down and hit the liquidations. Now, we've got a little bit of a liquidation zone right here, which shows $117 million worth of longs at the 28,568 zone. So we're going to go right now. It's just literally hit it. They have just hit that liquidity right there, and they're working their way back down. Now things are going to start picking up, ladies and gentlemen, so we're going to keep an eye out on Bitcoin, okay? Got Bitcoin on the top left. We're going to have the Bookmap right here. Remember, it's the statement. And then, of course, we have the federal funds rate. We're looking back, and we can see it's coming back down to test the VWAP right there, ladies and gentlemen. We have got 632 Bitcoin orders stacked at the top side. Do not do anything, guys. Do not play with fire here, okay? You are playing with fire if you're going to open positions. And the Fed has not released anything just yet. We've got 3 more minutes until that bad boy comes into play. Once that data comes out, we'll be able to sit back and relax until the press conference is engaged. In that time, I'm going to be talking about what MicroStrategy is planning on doing by getting rid of a certain amount of Bitcoin to meet some obligations. Now, here we go. So we got the movement. Dollar dominance ain't really giving me no flavor right now. I've got Bitcoin red vector candles coming into play. I think I'm going to expand the chart out. Keep an eye on Bitcoin right here. Bring up the Bookmap. Happy days. And this is where we are. So we're seeing price. It's coming down. Be careful. We've got a start of a new 1 hour candle coming into 2 minutes. Now, if this red vector candle does not invalidate this green vector zone, then that could be an opportunity for them to pick up more crypto. Okay, sorry, pick up more Bitcoin. It could be a trap to send it back up because the nearest pool of liquidity right now is right here, the 29,000 zone. We can make sense of that region. How long have I got? I've got 2 minutes. All right, let me bring it up for you. We can make sense of the liquidity in that area by looking at the liquidation points, which they've already attacked right here. So earlier they took out $542 million worth of short liquidations at 28,775. We go into the 7-day chart. We're probably going to try and see some liquidations coming up nearby. So here we go. Around the 29 zone, we currently have around $3 billion worth of short liquidations, and just above 29.50, we have got $2.3 billion worth of short liquidations. But down here is where my concern is. 26,450, we have got $4.8 billion worth of long liquidations. Now, in the next few minutes, ladies and gentlemen, they're going to be bringing the fire. Here we go. We're going to be witnessing some pretty fast price action, so hold on. Don't be making no trades because you're going to get shaken out if you're using high leverage. Those of you that have got experience in the game of trading understand what parameters you are going to be working with. But this is an advert right now to get people to commit, because regardless of what the statement says and whatever the federal funds rate is, the press conference is either going to send price up and down until it's finished, and then the market will find its true direction. Okay, so here we go. We have got 1 more minute. I hope you're all enjoying this, guys. I hope you're getting ready for it, because Bitcoin is about to pull some flavor in the charts. Here we go. Here we are. So I've got 490 Bitcoin orders and 505 Bitcoin orders between the 28,800 and the 28,890. You want to be paying attention to this area right here, guys, because that would then suggest that it's either going to be a fake order, which will be removed, or they're going to keep it static. It can switch in any instance, and this is on the 15-minute time frame, and we are in, ladies and gentlemen, 25 seconds left until they release the statement. And of course, the federal funds rate, we're going to see some reaction across the board, so just sit tight. Don't do anything until they release this information. Let the market absorb the information. After about 10 minutes, then you'll know exactly where you stand. And then we have the press conference straight after. I'll be looking at some altcoins as well and taking a few requests from you all on certain altcoins you want me to check out. Here we go. Here it is. Here we go. We've got the flavor coming in. Keep an eye out. 514 Bitcoin right there. I want to make sure that that area stays static. Could come back up to recover the red vector candle to go and attack the 29 zone. Is it going to do it? Statements out. Bitcoin's pumping up. Is it going? It's going for it. Oh, it stopped. Wait. That liquidity's still there. 554 Bitcoin. They're going to eat that liquidity. 28,800. It could be coming in here. Adding to it. It's off. Going for 29. Is it going to go for 29? This is not good. I don't like the pauses. I need to see the fast move. Bitcoin, look, they just took that order off. It's still there. It's coming off. It's moving higher. Got to be careful. Starting to sell off quite aggressively right there. It's come back down again. It's quite treacherous. Let me see where we are in the market. Gold is shooting up. Dollar's going down. That's good news. S&P is coming back up. That is good news for us. So Bitcoin is just giving us a little bit of volatility in the chart. So we just need to go back into Bitcoin. Let's see if it can find its feet. There should be some green vector candles appearing on the 5-minute time frame very shortly. Is that a vector candle? Here we go. Try to take that 29 zone. Narrowly missed it. Bitcoin looking like it's going to come back down if it can't hold this zone. This is at the VWAP right now. It's a critical point. Remember what we just said. We said if they can hold this area right here between the 28,200, and this vector candle zone at 28,256, then everything is all good to see Bitcoin potentially make the move up. But we're seeing the heads up because of the S&P starting to climb up right now. Can we quickly go back into that area? S&P's doing okay. It's coming back into the red vector candle zone. Gold is doing okay, but dollar's taking a nosedive. That would then suggest that people are going to be picking up assets. Risk may be back on. They're loading up Bitcoin orders to try and spike back up because we know the red vector candle is going to effectively get recovered. This is the first move, okay? This is not the move finished yet. It's not done. Press conference will be out very shortly, okay? So we need to be sticking around, waiting to see how they react to it. So we tried to see an attempt towards that 28,800 zone. Now Bitcoin's coming back up. We've got some green vector candles coming into play. Recovery of that. I'm not liking this. They need to continue moving up from this point because the daily open is triggering retail to believe that Bitcoin now is trading positive. Now we're going to start putting money into the chart. So we're waiting to see. 5-minute candle. 3 minutes, nearly 2.5 minutes left until this bad boy finishes. This candle needs to break higher. This is what we want. We want the 29 zone because they're building positions below that point. There's every reason for us to believe that they're going to try and spike towards that zone. As long as they stay within this region right here. So this green vector candle right there, if they stay beyond that point, happy days. This is our zone we're working on right now, okay? And you can see the treachery of it. Why would you want to trade this unless you are an AI bot and you know exactly when you're going to get in? You're playing with fire. This is why once the news comes out, give the market a chance to respond. We've had sort of a positive expectation because dollar is dropping. So we naturally know that assets across the board are going up. So even if you go over to euro, you can see euro, happy days. That means that things are looking good. But the press conference isn't done yet. Could this be the first trap? Because if Powell turns around and says that we're going to pause, that's going to send everything up even more. But if he turns around and says, well, we're going to be waiting on the data and the data might suggest that we need to keep on increasing interest rates, that's going to send the market into chaos. They've just marked price up. They are now selling into retail because retail right now is going in and buying, okay? We just want to know how far is it going to be for Bitcoin before it decides to initiate the reverse. Here we go. Still stuck in that zone. Bitcoin's giving us the flavor right now. Let's quickly go over to Ethereum and see where she's at. Ethereum makes a nice stop run to the upside, coming up, just narrowly missing that 1900 zone. Is still holding out, doing a very good job. Lots of accumulation happening inside of this zone. XRP brings the flavor to the chart as well. Little W formation coming into play right here. Happy days coming away. Rise, retrace, continuation is what we're looking for. Vector candles to the top side right there. Happy days. That's what we're looking for. 45 cents, 45, maybe 46 cents if everything works positively for us. But Bitcoin is still not giving me that flavor. Where are we at? Come on, let me just expand this out. What have we got? Look at this, look at this, look at this liquidation, look at the treachery, this madness. You don't want to trade this madness. You want to use this for information. If Bitcoin holds, look, the VWAP, 1, 2, 3 attempts at the VWAP. Each time they've gone down to the VWAP, volume was 495 at the bottom on just below right here, just below my head. Happy days. Then the middle one right here shows 581 Bitcoin orders, all right? But it ended up higher, suggesting support. Then in this area right here, we've got 188. So it's like they're slowing down as they're making way towards the VWAP, suggesting that they want to sell from a higher point. That's where we expect Bitcoin to start moving up. The orders are staying static in and around the 29 zone. The only thing that's going to move the markets now is Powell's conversation. So we've had ourselves the manipulative move. Bitcoin hasn't gone anywhere. It's gone up, it's gone down. Try to make its way towards it. Recovery of that red vector and the wick will be the ideal scenario for me, okay? Let me just quickly go over to here to see what the story is in the markets. What are they saying? Happy days, Treasury yields. They've not even done it. Have they actually updated it? No, it's 45 minutes ago, so we'll be naturally expecting them to update this very shortly with a bit of a statement on there. Go to the news itself and have a look. Federal Reserve, here's what's statement. Here we go. Economic activity expanded at a modest pace. First quarter job gains have been robust, so that is a bit of a problem for us. And the unemployment rate has remained low. Inflation remains elevated. That might be a bit of a problem. Banking system is sound. Yeah, all right. Then tighter credit conditions for households and businesses are likely to weigh on economic activity, hiring, and inflation. So they're giving, it looks like inflation is going to be the topic that they're going to be talking about, guys. And if Powell suggests anything that inflation is still being sticky, then it's going to suggest more interest rate increases, then we're going to be in for a surprise. And the idea of a pause might not be on the table. Right, Bitcoin is still holding out in this zone on the 5-minute time frame, ladies and gentlemen. We've rejected the daily open, and it doesn't look like it's trying to hold this zone right now. Let me just go into the higher time frames to make sense of this. 15-minute time frame, not too bad. I'm quite happy with Bitcoin's behavior right now. Didn't quite get the actual hit to the 29, but we're not done yet because this information is being released in 2 parts. The press conference is going to bring the flavor. He's going to say something, the market's going to wait for it, then they're going to put their positions in, set everything up, and move price accordingly. It's not done yet. Regardless of whatever Bitcoin does, it's not done yet. If Bitcoin collapses from here, then we've got the idea that maybe, in line with this story that we're talking about with MicroStrategy, which I'm going to be going into in a second, that could be the situation where MicroStrategy could be getting rid of Bitcoin, okay? But that's just me speculating right now. We won't know exactly when they're going to get rid of it, okay? Now, back into Bookmap, still holding that VWAP. If they hold the VWAP successfully, then we see Bitcoin moving away from that. But we've still got a bout of news to see, okay? Now, let me just go back into the smaller timeframes, make sense of Bitcoin to see where we are accumulating or preparing for what could be a move. Okay, so blue vector candles appearing at this low point. There seems to be a bit of interest. They're still trending upwards on the 1-minute time frame. I'm interested in this wick right here. That is my interest. If they invalidate this area, because look, Bitcoin's sharply coming up. It's probably going to be like this until Powell starts speaking. All right, let me just go back into Euro. Euro's coming back down, still showing a bit of strength. Red vector candle or violet. There it is, violet. That could be a heads up. This is what the hybrid system does. It gives us a bit of a heads up as to where price could effectively end up later. They may consolidate here. They've just gone long at the highest price, at the lowest point, at the highest range, and they're getting ready now to try and come back up into that zone. We go to Euro on the higher time frames. You can see they're trying to break out from this region right here. Look left, and you can see we're going into previous vector candle zones. This is a very important area for Euro to try and take that 11.80 mark. It is quite far away, but if the volatility is coming into the chart, then happy days. Anyone that's trading gold right now, which usually moves in line with Bitcoin, you can see that it's actually breaking up. Look at that pattern right there. The vector candle recovery comes into play right there, comes in, taps that wick, and then reverses back away. You see that right there? Happy days. Look back into the red vector, hits that vector zone, sells off from that point, but it hasn't broken down. Now, usually when gold moves up, it kind of gives us the heads up that investors are seeking the safety. And of course, with the idea that the actual statement has been focusing on tighter credit, inflation, robust jobs market, all right, it's only going to suggest to us that the Fed or Powell is going to be waiting for more data before we actually start what would appear to be the terminal rate. What is the Fed's idea of a terminal rate, which means, are they going to stop increasing interest rates? What will that figure be? Will it be 5.25%? Will it be 5.5%? And we're going to wait and see what he has to say about that. Just going back into Bitcoin right now, we can see it's doing okay on the 4-hour time frame. Recovery of this violet vector candle zone spiking up. I'm looking for this area at 29. That's what I'm looking for. And one good thing is Bitcoin has done a good job of holding this zone, okay? So we assume that we're still seeing higher prices for Bitcoin until we are invalidated. What would invalidate Bitcoin's move to the upside? If they stay beyond this 50 EMA cloud on the 4-hour time frame, if they stay below that, then Bitcoin's going lower because there's no interest to mark price up. There's interest coming in to trap traders long. So what they're doing is they're making traders go long inside of these zones. Okay? Now market maker effectively is advertising, say, look, go long on Bitcoin, and he might initiate one last push up, which will then attack the liquidity in this zone, and then FOMC press conference comes into play, and then it tries to come back down again. Those are the zones that I'm looking for Bitcoin to attack, and as long as Bitcoin stays in this area here, then we are good because they are testing an area of interest, because this is where the activity is beginning. Go into the 1-hour time frame, and we have ourselves these 2 wicks right here, which are a bit of a problem, but it's good news that we're now holding above the 50 EMA cloud on the hourly. So in the shorter term, momentum is looking like it might want to bring price back up. Okay, based off the 1-hour time frame. It will only invalidate it if it breaks beyond this cloud and trades below it. We go into smaller time frames. Can we see any vectors that they could come back into? Yes, there's this green vector candle zone right here. So now, a moment ago, we saw the move to the upside to try and take the 29. They didn't take it just yet because of the news. Volatile activity, all right? Now we're looking at this saying, okay, maybe if Bitcoin does break the cloud, then we're going to start seeing price roll into that vector candle zone. And each vector zone that they hit is a potential reversal point. Why? Because they're eating liquidity. They're attacking that zone, okay? Just look, why would you want to even take a trade on this? From a trading perspective, you want to improve the odds of a trade working in your favor. And the way you do that is by avoiding news. If you want volatility, this is what you would call a gamble, okay? So just be careful with your positions. We are still due to get that news coming out by the press conference very shortly. So that leads me on to the MicroStrategy story. If there was a time for MicroStrategy to roll off their Bitcoin, okay, when would it be? It wouldn't be when Bitcoin's dropping. They're suggesting that they could actually do it again. We've got these articles right here. MicroStrategy says that it could sell Bitcoin to pay long-term debt obligations, all right? And that's a bit of a problem. And those long-term debt obligations are amounting to around $2.2 billion. All right, then we go over to the actual stock itself, and we can see going into next year, their earnings per share is projected to be minus 97% in 2024 and dropping down to 0.91 cents earnings per share from a massive amount of $31. I mean, previously it was down minus 124 and minus 53. So their earnings per share, you can see the volatility of Bitcoin is just throwing these investors about. More importantly, management owns 6% of this, but 52% of funds own this. Fidelity owns this. Bank of America own this stock, all right? Because they don't want to buy Bitcoin. They just want to buy MicroStrategy that invests in Bitcoin. That's their way of hedging themselves or protecting themselves. But this stock doesn't look like it's doing too great. Okay, you can see price action is already down 5% for the day at $311 per share. All right, so it's good to keep an eye on what these guys are doing with their Bitcoin. Okay, there it is. MicroStrategy considers selling Bitcoin holdings to address debt obligations. That means that it's costing them a lot of money. And one thing that's got my attention is they're not disclosing how much debt they actually hold. Because if it showed that they had a lot of debt, if you can see right here, there it is, happy days. Debt shows it's not available. When it's showing that sort of thing, I'm questioning and thinking to myself, well, why aren't you telling us how much debt you've got? And that's clear as day that companies across the board are starting to feel the pain with high interest rates. Maybe long-term debt obligations. They could actually have some loans that need to be serviced. That's where they could be getting rid of crypto, getting rid of some Bitcoin. When would you want to get rid of Bitcoin? You don't want to get rid of it when it's going up, which is why I'm favoring the 29 zone. Because hypothetically, you're going to assume that if Bitcoin can keep moving up, everyone's buying it. Who's MicroStrategy going to be selling it to? They're going to be selling it to the people that are buying it. And we've got evidence of that right here on the liquidations chart. All you got to do is go to the liquidations levels and see where the purchases have appeared. Look at this. Look at how many people are getting bullied off right here. Look at that. Going long, $196 million worth of longs at 28,590. They come back down. They've missed their liquidation points, which are at 28,432. Okay? So they haven't had their liquidations hit just yet. So those guys are sitting nicely with a position that is fluctuating up and down, up and down. And it's naturally going to come back up because there's interest right now. Okay? But the press conference itself might make it a bit tricky. So if you are in longs, please take some money off the table if you've made a bit of profit. Put your stops in, okay? Now, let's have a look at some altcoins. Give me some of your altcoins, ladies and gentlemen. How many of you? 1,600 of you. And we have 300 likes. Thank you very much, 300 people. 300. My Spartans of the channel. Mad love for liking the stream. 1,600 of you. Get with the flavor, man. You got to like the stream. Okay, so as it stands right now, this thing here, it's a free service, and it tells you that the greed index is now 64. Okay, cool. Not really interested in that. I'm interested in this bad boy right here. All right? So this says that the daily call premium, okay, is higher than what the put premium is, okay? So there are more calls, more people are favoring higher prices than they are favoring lower prices. The issue that I've got with that is this. What if FOMC, so by the time FOMC press conference comes out, Bitcoin shoots up, traps those guys, all those guys in their options, so they're buying to favor higher prices, are in the money, okay? If they don't pay themselves, they've got all these stops down below, which could then be attacked by the market. So there's dead money for the market maker to attack in terms of options trading, all right? So if you are doing that, just be very careful. Let's check out the live flow and have a look at what coins are making the move. So we got Wojak, which has just experienced $27 million worth of volume coming in the futures markets. Okay, that's okay on Gate.io. And we've also got some Binance. We've got S&M, BUSD, only $1 million. I'm not interested in that. I'm not really seeing any other household names like PEPE coin. Right, let's have a look at what you guys want. ZPAY. Actually, we looked at ZPAY yesterday. Let's have a look at USDT. Here we go. How's that bad boy doing? So it's made a nice little flavoursome move to the upside. Come back down into the wick. It's a bit of a tricky asset, guys. Look at this. It's horrible. You want to be careful trading with that bad boy right there. What have we got? STX. USDT. How long we got? Okay, so we're going to be starting the FOMC press conference in the next 10 minutes, ladies and gentlemen. So make sure you're sticking around. You go and get yourself a little bit of a coffee because we're going to be playing the FOMC live. We're going to be listening to Jerome Powell and we're going to try and decipher the madness that he's about to unfold in the marketplace. So keep an eye out on that. Okay, so what have we got? Yeah, STX looking like it's trying to create a drop, retrace, continuation up 82 cents. But of course, remember, the market is going to be making volatile moves, so it can either go up or down. Once you get the information, there's one guarantee that I'm going to bring you guys tonight, okay? Going back into Bitcoin, the one thing that I can guarantee to you is this. There's going to be a vector candle that we can trade into, okay? Now, that's either going to come in the shape of a V-shaped play. So hypothetically, imagine if Bitcoin just takes a dump to the downside. This area right here will include a red vector candle, all right? At the same time, if it's a trap to shake out all the longs, all the long liquidations, they will bring it back up again. And there you will see a green vector candle appearing right here. That's what we're going to guarantee is going to happen with price action very shortly. So make sure you're sticking around here. All right, then, cool. So what have we got? ALGO. Let's have a look at ALGO for a second. USDT. We have got ALGO. I've done it again. ALGO USDT. Where we at? All right, starting to move up, coming back into some nice little vector zones right here. Looks like we want to see a daily open attack for ALGO. We have got 0.1786. Could be a very interesting point for ALGO if the volatility decides to come in. I've got MATIC making some flavoursome moves to the upside. Let's pull up the infamous PEPE coin. Where we at? Let's go on to MEXC. Making a nice little move right there, but it's had its heyday. If I'm honest with you, it looks like it's holding out. Nice little spike by Bitcoin will probably get people to buy. Okay, so just keep an eye out with this asset right now. All right, relatively cheap, but it's a meme coin and all of that. So just be very careful with it. Just make sure you're taking some money off the table. All right. Moving on from there. What else have we got? Waves coin. Let's have a look at Waves coin. Happy day. So what have we got? Waves. So Waves is in a specific zone that we've been marking off and paying attention to. Quite a lot of accumulation happening inside of here. And I've got red vector candle region right here that I need to be paying attention to because it would give me the heads up that they're going to try and attack this area because the market maker in essence went long and, well, he went short, realized the return, brought it back down, went long. Now we're waiting for it to come back up and eat the liquidity inside of this red vector candle zone. Remember, this is on the 1 hour time frame, so it's going to take a little while for it to try and move up unless the volatility comes into the chart and brings the flavor. All right, cool. Bitcoin on the USDT chart. Here we go. So the logic would suggest that if the USDT chart is starting to come down, that means that they're getting rid of USDT, or in essence, exchanging USDT to go into Bitcoin. And we have a little zone right here that they could be coming in and attacking. That could be the reason why Bitcoin could take the 29 zone. We need to see this bad boy collapse. We want to see people feeling like they're missing out and they want to be buying up Bitcoin. All right? That's what we want to see them do. Okay? Now, going into Luna. Luna's doing okay at $1.21. Still consolidating. It's come back into this wick right here. Let's go and have a look at Doge. Doge. See, it's got a lot of work to get through. It's got the vector candle zones right here that we need to be careful of. These are zones of liquidity that market maker is going to be returning to if we find the right news. And Powell is favoring things. If we just go over to the euro, it's coming back down again. We're going to Aussie yen with the carry trade principle, which means that when Aussie yen is going down, that means that they're using, in essence, dollar. They're exchanging dollars to buy Aussie, and then from Aussie, they're buying stock, all right? Because Aussie would be deemed as a high-yielding asset. And this is the carry trade principle. Now, if you see Aussie going down, dollar will be going up. That means they're getting rid of stock, and then they're using their Aussie to exchange back to dollars. Now we're seeing it trying to come back up. So that could be on the idea that they've just taken some profits. Now they're going to look to try and load up again. So we expect Aussie to start working its way back up into this zone. What else have we got? GALA. Let's have a look at GALA coin. GALA USDT, happy days. starting to make a little bit of a move to the upside. Okay, so it looks like we might actually have the low in GALA for the time being because we've had a little bit of a volatile move to the downside and it's coming back into the moving average, but don't do anything just yet because we still got the resistance of the cloud. They can come up towards this cloud, right? But then they could reverse from it. So we've got to be careful because it's starting to show that behavior. If you look at this, zone right there, zone right here, it's not able to get above it. We want it to go above so that we can break above the daily open right here and have more of a confidence that price is going to, you long support. That's what you do. So when price goes up, you can go long at this support zone because you know if it breaks that zone, you're wrong. You're going to keep your exit short and sweet. Okay? And if it holds that zone, yippee-ki-yay to the upside. That's the logic that we would suggest moving forward. Okay? HBAR USDT, that's the one that I'm seeing right now. All right, nice strong move up. Bitcoin ain't doing too much yet. Still at 28,635. I'm going to be looking at the order flow in Bitcoin in just a split second, so sit tight for me. Still, same story. All altcoins are looking like they're trading below the 50 EMA on the 1 hour time frame. So it looks like they're quite away from the 50. So we are expecting a retrace back into the zone. 8 minutes, ladies and gentlemen, before we actually get the party started. Man, I am working up a sweat. Let's just have a look at Ethereum again. Now, Ethereum's starting to climb up, guys, coming back into the vector candle zones. I'm waiting for Ethereum to get back into that 1917, ladies and gentlemen. That's what we want. We want those vector candle zones to be recovered because what's going on right now is we're going into liquidity. People that have been short are now paying the price. How long and how much of that liquidity is the market maker going to attack is the idea of this. Look, when you see the candlestick wicking up and down, what do you think's going on with these retail traders right here? They're panicking. They're adding to their margin to save themselves to move their liquidation point higher. That's when you'll see the market maker, in essence, aggressively attack a range. He'll attack this range with aggression because that's what's going on. People are quickly going to their phones and looking, oh my God, I need to move my leverage. I need to move my margin. I need to save my position because if I get liquidated, I'm done. He'll follow through with it. They'll even try and add to the position, start opening more shorts as it's going higher, forcing the retail trader to keep committing liquidity to save his ego. You don't want to have ego in this game, ladies and gentlemen. I'm telling you now, it's not a nice story to be rolling with, okay? Now, moving forward from there, let's just go back into BTC. Where we at? Not giving us the flavor just yet, ladies and gentlemen. Let's go outside and have a look. Dollar dominance has come back down. S&P's doing a great job of coming back up into this zone. Gold has made a nice spike to our projection at 2,035. Happy days right there, patrons of the channel. We smashed that one. So awesome right in that zone. Dollar dominance, nearly, dollar can break the 105 mark, then that is really good news for us because then that would then suggest everyone's running to assets paired against the US dollar, okay? Now, let me just quickly have a look at where we are in terms of our meeting. We're going to have Powell playing right here, guys. Okay, that's where we're going to have Powell going, and we're going to have it so you guys can hear it in the background. Can you take a look at SUI? I'll have a look at SUI. Come on, Bitcoin, where are you at? SUI, USDT. Okay, then here we go. So yeah, we spoke about this coin this morning, didn't we? Still holding out, not really giving us much flavor. It's been recently listed on CMC, which is a UK-based broker that deals with trading stocks or contracts for difference, okay? So we could see a little bit of volatility in this bad boy, but it's really for guys that trade in the European zone. Now, I'm not really seeing the move or any commitment coming in just yet, but it is a new coin, so just be careful with that. Go back into this chart right here. Let me have a look at Riff, because Riff right now is taking a bit of a battering, and I'm going to show you something as well. I always do this when I'm looking at altcoins or effectively trying to find opportunities with altcoins. So Riff is down nearly 7% according to this. And we've got a red vector candle, which has done a great job of holding above on the 1 hour time frame, 50 EMA. This is huge. Okay, because when they had the opportunity to sell it, it reversed from the daily open. Just look at the precision of the daily open. Now, listen, take this concept that I'm talking about and put it to any asset. All right, the heavier the liquidity of the asset you're trading. So Bitcoin, when you see it reject this area like this and you see it reject the daily open right there, that's a good sign. Okay. You want to pay attention to that sort of thing. We use the cloud as a measure to work out how likely the volatility and momentum is going to continue in our favor to the upside, all right? And this is a good setup right now, which could potentially lead up to finalize the vector candle zone at the 15 cents mark. Okay, it's just an observation in my opinion. If it holds this zone and above the 5 and 13 EMA moving averages, I would be favoring higher prices. But again, FOMC is going to put it in the bin if we don't hear what we want to hear. Solana coming up towards that vector candle, the 50 EMA zone. Now, as I said to you before, what do I like to look for when I'm looking for altcoin opportunities? Well, I'll go with my altcoins boss list, okay? And I see the highest performing coin, which is right now Render Token. Now, let me ask you, chat. 7% up. How many of you, just on face value, how many of you are buying that coin? Or should I say, how many of you are trading that coin for higher prices? How many of you would be taking a trade on a coin that has gone up by 7%? How many of you would you go long right now? Or how many of you would go short right now? Please type it in the comment section so I understand if I got pattern watchers here or if there's retail and you are new to the channel, because there's nothing wrong with you buying. It's not your fault. It's because the education out there has been installed in our minds to believe that when you buy, you sell higher. But if it keeps going up and you're buying as it's going up, you're getting trapped. And then you always end up with that situation of everything coming back down again. We've got evidence of that right in front of us right here. Only a few moments ago, people went long. What? It's $117 million worth of longs were opened at 28,726. Why on earth is it just taking a dump to the downside? Makes sense. So what have we got here? Here we go. So everyone is saying short, 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 short. Happy days. My people are with me on the same page. Let's have a look at Render Token. It's up 6%. The start of a new vector candle is coming into play. They're coming into the recovery of the red vector zone. This is what we're looking for the altcoins. This is probably one of the altcoins right now that is actually trading above the 50 EMA. That is important because they've established the intention. You see this candlestick right here? This is a stopping volume candle. That tells us that they tried to trap traders short to the downside. They got the conviction, recovered the vector candle, which is this green thing right here, and they reversed it. Not because they don't want lower prices. It's not a rejection where people aren't happy to buy here. That's not what's going on. People are selling at that point, okay? Because they're being trapped. They instantly reverse back up, and now they've attacked this area right here. And we would hope that by the FOMC, which is going to be starting in 2 minutes' time, ladies and gentlemen, so let's get ourselves set up. We would expect them to start moving towards this zone. So, guys, here we go. Let's get with the flavor. Let's get our charts set up. I'm going to go back to that in a short moment. Let's go back into Bitcoin. FOMC is starting to play out. Let's go to the 5-minute time frame to make sense of the actual breakdown in the chart. We're going to have Bitcoin over here. We want the 29 zone. That's what we're looking for. Happy days. We'll mark that bad boy off. And we're going to get Powell having a conversation very shortly. Okay, then. So we're going to play some nice little music. There it is. Nice little play. I'll leave that off right there. Okay, then. Are you guys ready for this? Yeah? It's going to be a very interesting moment in the charts. This is going to be the make or break for Bitcoin. I want to be paying attention to the Bookmap at the same time. All right? I'm going to try and expand this out and see his little... No, I won't do that. I'll do that right there. And keep it going. We're probably going to start hearing it coming on very shortly. Awesome. Okay, then, cool. So, 2:30, ladies and gentlemen. In a minute's time, we're going to hear what Powell has to say. You don't think I'm going to get my headphones out? Let's get the DJ set up. Here we go. Bitcoin's starting to do some flavor right now. I'm going to have it playing. Here we go. Come on. All right, then. Are you with me, ladies and gentlemen? Born ready. China. What's good? Playing the tones. Let's get with it. There you go. A little bit of nice ambient music right there. This is not music that you listen to before the pain in the backside that's going to be revealed very shortly. Okay? If it's bad news, man, then I'm not going to be happy. We want that 29. We want to know if Mr. Market Maker is setting us up. All right? VWAP. They just aggressively sold to the VWAP right there at 28,470. All right? Why'd you keep doing that, bro? Come on. Oh, it keeps on intermittent. Okay, then. All right. Should be live right now. Should be going for it. Here we go. We got some flavor coming in. Come on. We'll try and see if it's going to try and do it on YouTube. Yes, I know that. Let me just see how it's going to work out here. Okay, continue. Continue on that bad boy. Here we go. It's the same thing. Here we go. Got the flavor. Right. Expand that bad boy right there. Get away. All right, cool. Here we go. Oh, my days, pal. He's talking. Here we go. What you got for us, pal?
Good afternoon.
Good afternoon, my guy.
Before discussing today's meeting, let me comment briefly on recent developments in the banking sector.
Here we go.
Conditions
Holding the VWAP.
in that sector have broadly improved since early March, and the U.S. banking system is sound and resilient.
Okay.
We will continue to monitor conditions in the sector. We're committed to learning the right lessons from this episode, and will work to prevent events like these from happening again.
Okay, so he's telling us that he's going to prevent it from happening ever again. Thank you.
Chair for Supervision Barr's review of the Federal Reserve's supervision and regulation of Silicon Valley Bank.
Okay.
The review's findings underscore the need to
Bitcoin's
address
not
our
moving.
rules and supervisory practices to make
They're
for a
waiting
stronger and more
for
resilient
key
banking system. And I'm
words.
confident that we will do so.
Okay.
From the perspective of monetary policy, our focus
Here we go.
remains squarely on our dual mandate to promote maximum employment and stable prices for the American people.
Okay. That's
My
fine.
colleagues and I understand the hardship
Vector.
that high inflation is causing, and we
Here we
remain
go.
strongly committed to bringing inflation back down to our 2% goal.
More
Price
increase.
stability is the responsibility of the Federal Reserve. Without
No.
price stability, the economy does not work for anyone. In
Uh-oh.
particular, without price stability, we will not achieve
Come on.
a sustained period of strong labor market conditions that
Can we hear
benefit
this?
all. Today, the FOMC raised its policy interest rate by 1/4 percentage point.
It's moving. He's not said
Since early
anything.
last year, we've raised interest rates by a total of 5 percentage points in order to
Yes.
attain a stance of monetary policy that
Okay.
is sufficiently restrictive to return inflation to 2% over time.
He's too calm.
Also continuing to reduce our securities holdings. Looking ahead,
Okay.
we'll take a data-dependent approach in determining the extent to which additional policy firming may be appropriate.
So they're going to rely on a lot of data
I will
that's going to
have
be
more to
released
say about
soon.
today's
Non-farm
monetary
payrolls
policy
coming out
actions
Friday.
After briefly reviewing economic developments.
Okay, so Bitcoin's rejecting this
The US
area. That's
economy
good.
slowed significantly last year, with real GDP rising at a below-trend pace of 0.9%.
This is the beef of this. Here we go.
The pace of economic growth in the first quarter of this year continued to be modest at 1.1%, despite a pickup in consumer spending. Activity in
Right.
the housing sector remains weak, largely reflecting
VWAP.
higher mortgage rates.
It's holding.
Higher interest rates and slower output growth also appear to be weighing on business fixed investment.
Not saying anything we don't know.
The labor market remains very tight. Over the first 3 months of the year, job gains averaged 345,000 jobs per month. The unemployment rate remained very low in March at 3.5%.
He's got so
Even
much
so,
work
there
to
are some
do.
signs that supply and demand in the labor market are coming back into better balance.
Okay.
The labor force participation rate has moved up in recent months, particularly
Not
for
saying
individuals
anything that's
aged
really
25 to 54
grabbing me.
years.
And the market is showing that
Nominal
right
wage
now.
growth has shown some signs of easing, and job vacancies have declined so far this year. But overall, labor demand still substantially exceeds the supply of available workers.
Okay, then. Right. Here we go. Stop clearing your
Inflation
throat,
remains
bro.
well above our longer run goal of 2%. Over the 12 months
Now
ending
we're
in
seeing
March,
a change.
total
Here we go.
PCE prices rose 4.2%.
So prices are
Excluding
going
the
up.
volatile food and energy categories, core PCE prices
This is getting
rose
very
4.6%.
interesting. You're starting to get to the gritty.
Inflation has moderated somewhat since the middle of last year.
That's okay.
Nonetheless, inflation pressures continue to run high.
Holding the
And the
VWAP.
process of getting inflation back down to 2% has a long way to go.
That could be a heads up.
Longer-term inflation expectations appear to remain
Thank you, Alan.
well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well
Not
as
giving me
measures from
anything.
financial markets.
Not giving me anything.
The Fed's monetary policy actions are guided by
Here we go.
our mandate to promote maximum employment and stable prices for the American people. My
Sky, here we
colleagues
go.
and I are
Bitcoin,
acutely
Vector Condor,
aware
come
that
on.
High inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials.
Not happy with that.
Like food, housing,
They're
and
going for the
transportation.
liquidity.
We are highly attentive
Needs to
the
hold
risks
this.
that high inflation poses to both sides of our mandate. And we are strongly committed to returning inflation to our 2% objective.
Okay, come on.
At today's meeting, the committee raised the target range for the federal funds rate by a 1/4 percentage point.
Here we go.
Bringing the target range to 5 to 5.25%. And we're continuing the process of significantly reducing our securities holdings.
Oh,
With today's action, we have raised interest rates by 5 percentage points in a little more than a year.
Bitcoin's going to move
We
in
are
a
seeing
sec.
the effects of our policy tightening on demand in the most interest rate sensitive sectors of the economy, particularly housing and investment.
Careful.
It will take time, however, for the full effects of monetary restraint to be realized, especially on inflation.
So it's going to get worse.
In addition, the economy is likely to face further headwinds from tighter credit conditions.
We know
Credit
this.
conditions had already been tightening over the past year or so in
Come on,
response
big
to
sell
our
order
policy
there.
actions
Buy
and
order,
the softer
sorry.
economic outlook.
Come on.
But the strains that emerged in the banking sector in early March appear to be
too
resulting
calm
in
for
even
me.
tighter credit conditions for households and businesses.
He's not giving me anything. Come
These
on.
tighter credit conditions are likely to weigh on economic activity, hiring, and inflation.
This is the press
The
conference, the
extent of these
questions.
effects
That's where
remains
the flavor's going to come in. Bitcoin's
In light of these
paused.
uncertain headwinds, along with monetary policy restraint we've put in place, our future policy actions will depend on how events unfold.
Dollar's coming up.
In determining the extent to which additional policy firming may be appropriate to return inflation to 2% over time,
He's not giving me
the committee
anything.
will take into account the
Here
cumulative
we go.
tightening of monetary policy,
Here we go.
the lags with which monetary policy affects economic activity and inflation,
Here we go.
and economic
Come on,
and
hold.
financial developments.
Bitcoin breaks this. It's done.
We will make that determination meeting by meeting based on the totality of incoming data and their implications
Dollar
for the
dominance.
outlook for
It's
economic
going up.
activity and inflation. And we are prepared to do more if greater monetary policy restraint is warranted.
More interest rate increases then.
We remain committed to bringing inflation back down to our 2% goal.
Dude, you're going to
Our
screw the
longer-term
economy.
inflation
Look what you're
expectations
doing,
well
bruv.
anchored.
Look at these
Reducing
orders,
inflation is
28.2.
likely to require a period of below-trend growth and some softening of labor market conditions.
Come on, Bitcoin, hold that zone. They're
Price
in that zone of
stability is
holding.
essential to set the stage for achieving maximum employment and stable prices over the longer run.
Okay, so what? Look, you can see
conclude.
with what is going on right now, what he's talking about. He's not really giving us the core of it. Dollar dominance is starting to move up right now, okay? And he's not telling me anything that's going to suggest. Here we go, the questions, here we go. Here we go. This is where it's going to start getting interesting, the questions.
Hi, Gina Smiler, New York Times. Thanks for
Gina
taking our
Smiler,
questions.
how you
I wonder
doing?
if you could tell us whether we should read the statement today as a suggestion that the committee is prepared to pause interest rate increases in June. And I also wonder if the Fed staff has in any way revised their forecast
This
for
is
a
where it
mild
gets
recession
interesting.
from the March
Sit tight.
minutes. And if
Don't
so,
take
what
no-
a recession,
Nasdaq's
like
pumping,
what they're
okay?
envisioning would look and feel like when it comes to, for example, the
When
unemployment
dollar
rate.
goes up, NASDAQ moves up as well.
So, taking your question, of course, today our decision was to raise the federal funds rate by 25 basis points.
Okay, that's fine.
A decision on a pause was
Please
not made
don't
today.
repeat everything you're
You will
saying.
have noticed that in the statement from
They
March,
broke the
we had a
VWAP.
sentence that
Now we
said,
wanna see 'em
"The
try and
committee
break up."
anticipates that some additional policy firming may be appropriate." That sentence is not in the statement anymore. We took that out, and instead we're saying that in determining the extent to which additional policy firming may be
edited the
appropriate to return
statement.
inflation to 2% over time, the committee will take into account certain factors. So
Come on.
that's a meaningful change that we're no longer saying that we anticipate. And
Say it.
so we'll be driven by incoming data, meeting by meeting. And,
Again,
we'll approach
same
that question
data
after
driven.
June
They
meeting.
keep doing this every FOMC meeting. They keep saying data driven,
so
data driven,
the,
data driven.
The staff's forecast.
No
is-
direction
so
has been set yet.
Let me start by saying that that's not my own most likely case, which is really that the economy will continue to grow at a modest rate this year.
Okay,
And
cool.
that's,
No
so
recession.
Different people in the committee have different forecasts. That's my own assessment.
That's him
of
just
most likely
addressing that
path.
right there.
Staff produces its own forecast, and it's independent of the forecasts of the participants.
Here we go.
Which include the governors and the Reserve Bank presidents, of course.
They're
And we think
liking
this
it.
is a healthy thing, that the staff is writing down what they really think. They're not especially influenced by what the governors think, and vice versa.
Shut up, man,
The
just
governors
say
are
it.
not taking what the staff says and just writing that down. So it's actually good that the staff and
Nice.
individual
Powell's doing
participants,
all right for us.
can
Nasdaq's
have
moving
different
up.
Perspectives.
Here we go.
So
Give me that
broadly,
29.
The
Come on.
forecast was for a mild recession, and
Ah,
by
here
that
we go.
I would
He's saying it.
characterize as one in which the rise in unemployment is smaller than has been typical in modern era recessions.
Okay, that's good news for us in essence.
I wouldn't want to characterize the staff.
Big sell order coming, 672 Bitcoin orders at 28,640. He's saying something important right now.
Broadly similar to that.
Rachel.
Come on, Rachel, give me the flavor, Rachel. What question you got for me? He's too cool, man. He's sitting back. Look at that little smile.
I'm wondering if you can talk about the
He's happy.
account of possible effects of a debt limit standoff.
Ah,
You
the
said
debt limit.
repeatedly
Here we
the ceiling
go.
Must be raised. But
Come
do you
on.
see any economics effects of even getting close to a default?
She
And
looks
what
like she's
type of
about
situation would that look
13
like?
and was allowed because her dad said, go on, pop in and
So
ask
I
a
wouldn't wanna
question. Like,
speculate
come on, I want the
specifically, but I will say
economists.
this. These are
He just
fiscal
shut her
policy
down.
matters for starters, and they're for Congress and the administration for the elected parts of the government to deal with.
Pal,
they're
just
really
come on, man.
consigned to
Say
them.
something. Look,
From
we
our
got a little
standpoint,
bit of flavor. Come
I
on.
would just say this. It's essential that the debt ceiling be raised in a timely way so
Okay.
that the U.S. government
Timely.
can pay all of its bills when they're due. Failure to do that
June
would be
1st.
unprecedented. We'd be in uncharted territory, and the consequences to the U.S. economy.
They don't know what they
be
would do, in other
highly
words.
uncertain and could be quite averse. So.
Bit of sell.
I'll
They
just
didn't
leave it
trigger
there.
that sell order
We
just
don't
yet.
give advice
Bitcoin's
to
not.
either
There's no
side.
direction just
We
yet.
just
But
would
I'm
point
liking
out
what I'm seeing.
that
Nasdaq's
it's
moving
very
up.
important that this be done. And the other point I'll make about that, though, is that no one should
Bonds are
assume
starting to move up as
that
well.
the Fed can protect the economy from the potential, short and long-term effects
Come
of
on.
a failure to pay our bills on time.
Failure to
It
pay
would
our
be so
bills on
uncertain
time. Bruv,
that
are
it's
we in
just as
these
important
times and
that
ages right
this-
now?
We never get to a
Can you
place
believe
where we're
it?
actually talking about or even having a situation where the U.S.
Back above
government's
the
not paying its
VWAP.
bills.
Starting to sell. Come on.
Was discussion around the uncertainty of a possible standoff, did that affect today's monetary policy decision at all?
I wouldn't say that it did. It was, of course, it's something that came up. We talk a lot about risks to the outlook, and that come
looks
up.
promising.
A number of people
I'm not
did
really
raise that as a
seeing
risk to the outlook. I wouldn't say
oil
that it was
is
important in
taking a bit
today's,
of a turn
monetary
right now.
policy decision yet.
Tesla's not liking it really. It's still up 2%. Well, it's actually no, Tesla. It's okay right now. Here we go. Next question. So we're not done yet, guys.
Steve Leisman, CNBC.
Here we go.
Can you tell us what the Federal Reserve Board did in the wake of that February presentation where you were informed that Silicon Valley Bank and other banks were experiencing interest rate risks? And can you tell me what supervisory actions you've done in the wake of the recent bank failures to make sure that banks are currently appropriately managing interest rate risk? And kind of part three, but it's all the same question here. Do you still
ask
think
it then,
this
bro.
separation principle that monetary policy and supervision can be handled with different tools? Thank you.
So the February 14th presentation, I didn't remember it
They
very
best
well,
not
and
bring
now,
no
of course, I've
pain
gone
to
back
my
and
guy,
looked
Jerome,
at it
man.
very
I'm not
carefully.
having this.
I did
They are-
remember it.
He's been
And what it
smiling.
was a general
But we ain't seen the
presentation. It
move
was
just
an
yet.
informational briefing of the whole
Holding
board,
the
entire
VWAP.
board. I think all members were there. And
He's
it
not
was about
talking.
interest rate risk in the banks and lots of data. And there was one page on Silicon Valley Bank which talked about,
He's not really talking much right now, okay?
Mark-to-market losses
But
they had.
what I'm seeing right now, guys, is you can see Bitcoin's not doing the move. You can see how treacherous this area is. Once they ask that important question that's going to make the market move, then you'll see the flavor coming in. But if they just keep asking these mediocre questions and Powell doesn't really reveal anything, the market's going to do its own thing. That's what we're really waiting for, okay?
Remember it.
Let's see what else he's saying.
In terms of what we're doing, of course, I think banks themselves are many banks are now are attending to liquidity and taking opportunity now, really since the events of early March to
Yes,
to build
JP
liquidity.
Morgan is buying everything up,
and,
bruv. That's what it's doing. That's where your
You asked about the
liquidity's from.
separation principle. Like so many
No
things,
stuttering.
it's very useful.
Holding out, look.
But ultimately, it has its
I'm not
limits. I mean,
seeing-
I think in this particular case, we have
29,
found
man.
that,
Come on.
the monetary policy tools and the financial stability tools are
Too
not in
many
conflict.
orders
They're both-
down here.
they're
That's
working
not
well
nice.
Together. We've used our
That
financial
can
stability
suggest
tools to
a
support banks
safety
through our lending
or
facilities.
a flush out.
And,
Got to be
at
very
the same time,
careful
we've
here.
been able to use our monetary policy tools to foster maximum employment and price stability.
Nasdaq's moving up. It's doing nice. Here we go. New question. Don't clean your throat on live, man. Come on.
Staff report said
This guy again.
SVB has significant interest rate risk. It said interest rate risk measurements failed at SVB, and it said banks with
Take a
large
time to
unrealized
play with
losses
yourself,
face
man. What's
significant
going on
safety
with
and
this guy?
soundness
Look at
risk.
him
Why was
stroking
that
his
not
hair.
alarming?
What hair? No offense
Well,
to
I didn't
anyone,
say it
but
wasn't
come
alarming.
on,
It
man.
was- they're pointing out
Grooming
something
himself
that they're
before he
working
speaks
on,
to
and that they're
Powell.
on the case. I'm not sure whether they mentioned. I think they did actually. They mentioned
Not getting that
they
VWAP,
had
guys.
taken
It's still there.
regulatory action, or supervisory action in the form of matters requiring attention. So I think that was also in the presentation. I think it was to say, yes, this is a bank, and there are many
They're
other
not giving
banks
us
that are
anything. So the
experiencing
market right now is
these
just going to
things,
do its
and
own
we're on
thing.
the case.
No one's asked the question. Come on, go away from that guy. Hands up. Here we go. Come on, Bitcoin, man.
I wanted to ask you, obviously, with the recent bank turmoil, we've seen multiple
Banks seem to be
banks
moving
buy
things.
other banks, and I was just curious
JP
whether
Morgan.
you think that further consolidation in the banking sector would increase or decrease financial stability, and whether you have any concerns about the biggest bank in the U.S. Getting even larger.
Here we go.
So, we certainly don't have an agenda to further consolidate banks. There's been consolidation.
He knows
has
she
been a
just
factor
asked
in
that
the US banking
BS
industry
question.
really since
Right?
interstate banking.
And he's
and
like,
before that even.
yeah,
It goes back
okay,
more than 30
I
years.
understand. And
when I was in the government
yeah.
a while back, I think there were
He's going to tell a
14,000
story now.
banks.
Like, let's
there
get your
are
books out. Get your
4,000
milk
exchanges.
out,
So
everyone.
that's going
Pal's
on.
telling a
I
bedtime
personally
story.
have long felt that having small, medium, and large-sized banks is a
Nasdaq's
great
moving
part
down.
of
It's a
our
treacherous
banking
time to
system.
trade, guys. Don't look for
the
anything
community
yet.
Banks serve particular customers very well. Regional banks serve very important purposes, and the various kinds of GSIBs
We know
do as
what
well.
they
So I
are,
think it's
bro.
healthy to have
This is the BS that we have to endure during these moments. That's why, and that is evident with the market behaving like this. He's lying.
Is it a financial? So I would just say, in terms of JP Morgan buying First Republic.
Come on, boy. Say it.
The FDIC really runs the process of closing and selling a closed
The
bank.
FDIC has
Completely.
not
That
got
is
the
their
money
role, so I
to
really don't have
back
comment
these
on-
deposits, bruv.
On that process. As you know,
They have
there's an
128
exception to
billion
the
in
deposit
cash,
cap, for
and they
a
are
federal bank.
insuring
So it was
$9
legitimate, and I
trillion
think the
worth
FDIC,
of
I believe,
deposits.
is bound by law to take the bid
do the
that
math,
was the
bro.
least cost bid. So I would assume that's what they
Bitcoin's
did.
still holding. This is what I mean. Nothing's coming out.
They're getting larger in general.
So I think it's probably good policy that we don't want the largest banks.
You've got to try
doing
and
big
spot the
acquisitions.
questions that he gets
That is the
asked,
policy.
and he's like,
and, but this is an exception for
you know,
a failing
it does-
bank, and
it's-
I think it's actually a good
it's
outcome for the banking
hilarious.
system. It also would have been a good outcome.
this guy's talking about the economy right now, and he's like, yeah, try and skipping questions, but bless him. He's not allowed to say certain
Our
things.
agencies and the law as it goes to the least cost bid.
So Nasdaq's come back down again. Come on, come on.
Thank you.
Be
Colby
kind.
to Financial Times.
Okay, this will be a proper question. Financial Times.
Credit conditions from the recent bank stress could be equal to one or more rate increases. So given developments since then, how has your estimate changed?
Yeah, I think I followed that up by saying it's quite impossible to have a precise estimate of the words to that effect. But in principle, that's the idea. You know, when we've been raising interest rates, and that raises the price of credit, and that, in a sense, restricts credit in the economy, working through the price mechanism. And you know, when banks raise their credit standards, that can also make credit tighter in a kind of broadly similar way. It isn't possible to make a kind of clean translation between one and the other, although firms are trying that, and you know, we're trying it. But ultimately, we have to be honest and humble about our ability to make a precise assessment. So it does complicate the task of achieving, you know, a sufficiently restrictive stance.
Nothing's happening, man. Bitcoin ain't moving.
In principle, we won't have to raise rates quite as high as we would have had this not happened.
That's
the extent
good.
of that is so hard to predict because we don't know how persistent these effects will be. We don't know how large they'll be and how long they'll take to be transmitted. But that's what we'll be watching carefully to find out.
Okay,
Just to
Bitcoin's now
quickly follow
showing
up,
some
what
flavor.
does
Here we
it
go.
suggest about the scope for the committee to pause rate increases perhaps as early as next month, even if the data remains strong then, if it's having some kind of substitute effect?
Critical question.
This is just something that we have to factor in as we want to find ourselves. So I guess I would say it this way. The assessment of the extent to which additional policy firming may be appropriate is going to be an ongoing one, meeting by meeting, and we're going to be looking at the factors that I mentioned that are listed in the statement.
NASDAQ is taking a bit of a tumble right now, guys. Sorry to cut it. Bitcoin's holding out, but NASDAQ is moving down ever so slightly. It hasn't tested its daily open just yet, but he's not really giving us anything to suggest.
Policy, credit tightening is a different thing. There's a lot of literature on that, but translating it into rate hikes is uncertain. Let's say it adds even further uncertainty. Nonetheless, we'll be able to see what's happening with credit conditions, what's happening with lending. There's a lot of data on that, and we'll factor that into our decision making.
Howard Schneider with Reuters. Thank you. So noting that the statement dropped the reference to sufficiently restrictive, I was wondering, given your baseline outlook, whether you feel this current rate of 5 to 5.25% is in fact sufficiently restrictive.
So that's going to be an ongoing assessment. We're going to need the data to accumulate on that. Not an assessment that we've made. That would mean we think we've reached that point, and I just think it's not possible to say that with confidence now, but nonetheless, you will know that the summary of economic projections from the March meeting showed that at that point in time that the median participant thought that this was the appropriate level of the ultimate high level of rates. We don't know that. We'll revisit that at the June meeting, and that's we're just going to have to. Before we really declare that, I think we're going to have to see data accumulating and make that, as I mentioned, an ongoing assessment.
And a follow-up on credit, if I could you give us a sense of what the SLUS survey indicated? It was already, I think 45% of banks were tightening credit as of the last survey. What did this one show, and how did that weigh into your deliberations?
So we're going to release the results of the SLUS on May 8th, in line with our usual time frame. And I would just say that the SLUS is broadly consistent when you see it with how we and others have been thinking about the situation and what we're seeing from other sources. You will have seen the Beige Book and listened to the various earnings calls that indicate that mid-sized banks some of them have been tightening their lending standards. Banking data will show that lending has continued to grow, but the pace has been slowing really since the second half of last year.
Okay, it's looking good. Come on. Here we go, big order coming in.
Chair Powell, the argument around the end of last year and the beginning of this year to slow down the pace of increases was to give yourself time to study the effects of those moves. After the bank failures in March, as you've discussed, the Fed staff projected a recession starting later this year. So my question is why it was necessary to raise interest rates today, or put differently, if the whole point of slowing down the pace was to see the effects of your moves, and now you've, for the last 2 meetings, been seeing the effects of those moves. Why did the committee feel it was necessary to keep moving?
Well, here
we go.
The reason is that we, again, with our monetary policy, we're trying to reach and then stay at for an extended period, a level of policy stance that's sufficiently restrictive to bring inflation down to 2% over time, and that's what we're trying to do with our tool. I think slowing down was the right move. I think it's enabled us to see more data, and it will continue to do so. So we really we have to balance. We always have to balance the risk of not doing enough and not getting inflation under control against the risk of maybe slowing down economic activity too much. And we thought that this rate hike, along with the meaningful change in our policy statement, was the right way to balance that.
And just to follow up, what you said in response to Howard's question, you'll need data to accumulate to determine if this is a sufficiently restrictive stance. Does that data need to accumulate, or could it accumulate over a longer period than a 6-week intermeeting cycle?
As I mentioned, I would just say that this assessment will be an ongoing one. You can't with economic data. You can't. You've seen take inflation from it. Look back. We've seen inflation come down,
always
move
look
back
back.
up, 2 or 3 times since March of 2021. We've seen inflation have a few months of coming down and then come right back up. So I think you're going to want to see that, that a few months of data will persuade you that you've got this right, kind of thing. And we have the luxury. We've raised 500 basis points. I think that policy is tight. I think real rates are probably, that you can calculate them many different ways, but one way is to look at the nominal rate and then subtract a reasonable estimate of let's say 1-year inflation, which might be 3%. So you've got 2% real rates. That's meaningfully above what most people would, many people anyway, would
come on,
would
Bitcoin,
as the neutral rate. So policy is tight, and you see that in interest-sensitive activities, and you also begin to see it more and more in other activities. And if you put the credit tightening on top of that and the QT that's ongoing, I think you feel like we may not be far off, or possibly even at.
Lots of accumulation. Bitcoin starting something. Can I ask a question?
Thank you very much, Chair Powell. Edward Lawrence with Fox Business.
Here we go.
If the Federal Reserve gets down to the 3% inflation, as the projections show at the end of this year, or close to it, would it be okay for you for a prolonged period of 3% inflation and hoping for some outside event to move down to 2% target?
Great question. Great question.
Look, I think we're always going to have 2% as our target. We're always going to be focusing on getting there.
Cheers, bro.
I'm okay with a prolonged 3%.
You know what? It's let me just say that's not what we're looking for. We're looking for inflation going down to 2% over time. I mean, that's not a question that's in front of us, and it would depend on so many other things. But ultimately, we're not looking to get to 3% and then drop our tools. We have a goal.
They're not liking
2%. We think it's going to take some time. We don't think it'll be a smooth process, and I think we're gonna need to stay at this for a while.
How does the mandate the job side? Once you get to 3%, going from 3 to 2, how does the other side of the mandate balance?
I think they will both matter equally at that point. Right now, you have a labor market that's still extraordinarily tight. You've still got 1.6 job openings, even with the lower job openings number, for every unemployed person. We do see some evidence of softening in labor market conditions, but overall, you're near a 50-year low in unemployment. Wages,
that's a problem.
You all will have seen the wage number from late last week, and it's whenever it was, and it's a couple percentage points above what would be consistent with 2% inflation over time. So we do see some softening. We see new labor supply coming in. These are very positive developments, but the labor market is very, very strong. Whereas inflation is running high, well above our goal, and right now we need to be focusing on bringing inflation down. Fortunately, we've been able to do that so far without unemployment going up.
Matt. Not giving us anything.
Hi, Chair Powell. Matthew Boesler with Bloomberg News. So many analysts noted at the time of the March FOMC meeting that at least half of Fed officials' projections did imply or seem to imply that a recession was in their baseline forecast.
Good question, Matt.
Strong first quarter GDP tracking estimates. And so I'm just wondering if you could kind of elaborate on, why you're optimistic that a recession can be avoided, given that that's the Fed staff's forecast, possibly also the broader committee's forecast as well, and also, of course, most private sector forecasters.
Yeah, I don't think, I know what's printed in the Summary of Economic Projections and all that. I don't think you can deduce exactly what you said about what participants think, because you don't know what they were thinking for first quarter GDP at that point. They could have been thinking about a fairly low number. Anyway, in any case, I'll just say I continue to think that it's possible that this time is really different. And the reason is there's just so much excess demand, really, in the labor market. It's interesting, as we've raised rates by 5 percentage points in 14 months, and the unemployment rate is 3.5%, pretty much where it was, even lower than where it was when we started. So job openings are still very, very high. We see by surveys and much evidence that conditions are cooling gradually, but it really is different. It wasn't supposed to be possible for job openings to decline by as much as they've declined without unemployment going up. Well, that's what we've seen. So there are no promises in this, but it just seems to me that it's possible that we can continue to have a cooling in the labor market. without having the big increases in unemployment that have gone with many, prior episodes. Now, that would be against history. I fully appreciate that. That would be against the pattern. But I do think that the situation in the labor market with so much excess demand, yet wages have been moving down. Wage increases have been moving down, and that's a good sign, down to more sustainable levels. So
I think when he finishes,
I think the case of avoiding a recession is, in my view, more likely than that of having a recession.
Happy days.
But it's not that the case of having a recession is. I don't rule that out either. It's possible that we'll have what I hope would be a mild recession.
Let us have our day. Come on.
Wage growth was still well above levels that would be consistent with 2% inflation. Do you see that as well? And could you kind of explain, how you come to that judgment?
Sure. So we look at a range of wage measures, and then that's a nominal. And then so you assume wages should be equal to productivity increases plus inflation.
Stacking orders.
And so you can look at the Employment Compensation Index, average hourly earnings, the Atlanta Wage Tracker, compensation per hour, basically those four, and many others, and you can look at what they would have to run at over a long period of time for that to be consistent with 2% inflation. They can deviate. Corporate margins can go up and down, and there is a feature of long expansions where they do go down, where labor gets a bigger share toward later in a recession.
Come on.
Later in an expansion. So, yeah, and we calculate those, and you have to take the precision with a degree of salt. But
did he just
I would
say that wrong?
That what they will show is that, if wages are running at 5%, 3% is closer to where they need to be. Wage increases closer to 3%.
Come
roughly,
on.
Is what it would take to be consistent with inflation over a longer period of time.
Nothing. I think Bitcoin's going to make the move shortly.
I do not think that wages are the principal driver of inflation. You're asking me a very specific question. I think there are many things. I think wages and prices tend to move together, and it's very hard to say what's causing what. But I've never said that that wages are really the principal driver, because I don't think that's really right.
Great.
They're stacking orders here, man.
Press. Well, you mentioned profit margins. Those have did expand sharply during this inflationary period. And while there are some signs that they are starting to decline, many economists note they haven't fallen as much as might be expected, given that we're seeing some pullback among consumer spending. So, speaking of causes of inflation, do you see expanded profit margins as a driver of higher prices? And if so, would you expect them to narrow soon and contribute to reduced inflation in the coming months?
You're going to start.
Higher profits and higher margins are what happens when you have an imbalance between supply and demand. Too much demand, not enough supply. And we've been in a situation in many parts of the economy where supply has been fixed or not flexible enough. And so, the way the market clears is through higher prices. So I think as goods pipelines have gotten back to normal, so that we don't have the long waits and the shortages and that kind of thing, I think you will see inflation come down, and you'll see corporate margins coming down as a result of a return of full competition, where there's enough supply to meet demand, and then you're really back to full competition. That would be the dynamic I would expect.
Not giving anything away. Market's just going to run.
Michael McKee from Bloomberg Radio and Television. Can you tell us something about what your policy reaction function is, your policy framework is going forward? When you look at the economy at the next meeting, are you looking at incoming data, which is by definition backward looking? Are you going to be forecasting what you think is going to happen? Are you ruling out the rate cuts that the market has priced in?
Here we go.
You didn't catch the last part.
Markets have priced in rate cuts by the end of the year. Do you rule that out?
Okay.
He heard him.
What are we looking at? I mean, we look at a combination of data and forecasts. Of course, the whole idea is to create a good forecast based on what you see in the data. So we're always looking at both, and it will, of course, it'll be the obvious things. It'll be readings on inflation. It'll be readings on wages, on economic growth, on the labor market, and all of those many things. I think a particular focus for us going now over the past 6-7 weeks now, and going forward is going to be what's happening with credit tightening. Are small and medium-sized banks tightening credit standards, and is that having an effect on loans, on lending? And so we can begin to assess how that fits in with monetary policy.
Keep going, pal.
Thing. I just, we'll be looking at everything. It's, again, I would just point out, we've raised rates by 5 percentage points. We are shrinking the balance sheet. And now we have credit conditions tightening, not just in the normal way, but perhaps a little bit more due to what's happened. And we have to factor all of that in and make our assessment of, of whether our policy stance is sufficiently restrictive. And we have to do that in a world where policy works with long and variable lags. So this is challenging, but we will make our best assessment, and that's what we'll be thinking.
Give him a round of applause, man.
Rate cuts.
Yeah, so
here we go. Yes.
We on the committee have a view that inflation is going to come down, not so quickly. It will take some time. And in that world, if that forecast is broadly right, it would not be appropriate and to cut rates, and we won't cut rates. If you have a different forecast, and markets have been from time to time pricing in quite rapid reductions in inflation, we'd factor that in, but that's not our forecast. And of course, the history of the last 2 years has been very much that inflation moves down. Particularly now, if you look at non-housing services, it really hasn't moved much, and it's quite stable. And so we think we'll have to. Demand will have to weaken a little bit, and labor market conditions may have to soften a bit more to begin to see progress there. And again, in that world, it wouldn't be appropriate for us to cut rates.
Courtney?
He's not giving.
Courtney Brown from Axios. I'm curious how you view the role of the overnight reverse repo facility in the context of the current banking stress. Do you think it's contributing to the stress by making it more attractive for money market funds to compete with banks for deposits? And did the committee discuss any changes to the structure of the facility?
That was only the only thing that he could have given us.
Thanks.
Sure.
And
so we looked at that very carefully, as you would imagine, and it's really not contributing, we don't think now. It hasn't actually been growing. It moved up, it moved down, and then moved back up to where it was. What happened in the when there were the big deposit flows, which by the way have really stabilized now, what happened was institutional investors took their uninsured deposits and put them in government money market funds, which bought paper from the Federal Home Loan Banks and things like that. Over the course of maybe the last year, retail investors had been gradually, as they do in every tightening cycle, they've been gradually moving their deposits into higher yielding places such as CDs and other things, including money market funds. So that's a gradual process that is quite natural and happens during a tightening cycle. What was unusual really was the institutional investors moving their uninsured deposits and spreading them around and things like that. But it doesn't seem to have had any effect overall on over the overnight repo facility.
Nothing.
That is really there to help us keep rates where they're supposed to be, and it's serving that purpose very well.
I'm not happy with this. No one's asked that question yet, and he ain't given the answer.
I want to go back to the debt ceiling for a moment. I know you talked about that in terms of fiscal policy, but can you just speak towards what the impact of a default would mean for Americans across the country, the markets, and borrowing?
Here we go.
Yeah, I would just say it's. I don't really think we shouldn't even be talking about a world in which the U.S. doesn't pay its bills. It just. It just shouldn't be a thing. And again, I would just say no one should assume that the Fed can really protect the economy and the financial system and our reputation globally from the damage that such an event might.
I think, ladies and gentlemen, we ain't getting the flavor that we want, okay? Bitcoin's starting to roll over right now, and we're not getting anything that's going to suggest that the market is going to react unless he finishes talking, okay? Being asked other questions, not really giving us anything, but let's just make the assumption right now, okay? Once he finishes with this, okay, I'm going to kill this off and let you guys, because I've left this live go on too long of keeping you guys occupied. Let's get into it right now. Look. Bitcoin's done a good job of holding so far so good inside of this zone. The second the FOMC press conference finalizes, that's when we're going to see exactly what the true intention is of what he said. He's addressed inflation, he's addressed the idea of a recession, and he kept on going back and forth and not really giving us anything that's going to say, okay, yes, we're going to fight inflation, we're going to fight recession, it's going to be done, don't worry about it. He's always put us up here, and then he just brings us back down again. So there seems to be some level zone. Now that we've got the idea of price working its way down to this area, remember, this area is where limit buys are coming in, okay? Limit buyers are stepping in. Now, as long as these guys hold this area, the 28 zone could be a reversal point because, look, there's big orders being accumulated inside of this zone, okay? We look out in the chart and we see that we have still held this region right here. So it's not over for Bitcoin. If they invalidate this area right here, then we're going to have a problem when it works its way towards 28 because they'll be attacking the vector candle zones. We want that 29, but the press conference is still going. Will we get it? Who knows? You can only see what's going on right now with the NASDAQ and the S&P. Look, NASDAQ, look at this horrible behavior. It's tricky. He's not giving them anything. Once he finishes talking, ladies and gentlemen, that's when the flavor will start coming into the chart. All right? Guys, listen, mad love and respect to all of you. 2,042 people, mad love to you all for passing through. I hope you've enjoyed it. We've had a bit of a laugh and a joke. And if you are new to the channel, make sure you like the stream, hit the subscribe button as we'll be going live again tomorrow for the New York live stream to see the aftermath of this bad boy. And if you want to learn more about the hybrid system that we were talking about, check out the chat. The pin to the top of the chat is a link there so you can dive in a little bit more and learn more about the hybrid system over on Patreon. Take care of yourselves, gang. I hope you've enjoyed it. Mad love. Peace.